presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Eddie in Boca Raton. Hey, Eddie, what's going on?
Hey, Tom. How are you, man?
I'm doing great, man. Yourself?
Good, good. It is a treasure to have TFNN every hour during the trading day, to be there to help you, to guide you, and even to give you some peace of mind, or like that somebody else is there with you while you're trading this crazy market, either up or down.
Well, listen, we appreciate you growling and prowling with us out here, because we wouldn't be out here, folks, if we didn't have all you guys, gals, tigers and tigresses as clients. And, you know, the market teaches you every single day, man.
Now, Tom O'Brien.
What's going on, everyone? This is Jacob Shoup. You're watching the Tom O'Brien Show. We actually have a lot to go over today. We're going to have Basil Chapman on a little bit earlier than usual. And of course, we have our man Tim Ord of the Ord Oracle coming on as well, the third and fourth segment. Let's take a look at what we got going on in the markets right now. We have the composite about 0.87%. You have the Dow Jones Industrial off about 0.2%. You have that dollar still pretty strong on the counter trend bounce at 104.32. You have crude oil coming down still a little bit more at 67.24. You have that E-mini up about 0.28%. And you have the gold contract continuing to make, all-time highs, especially in an environment with an extraordinarily strong dollar. I think you see that dollar getting even a little bit stronger as well, kind of going forward. You have persistent fears of a recession going on in Germany, obviously a economic powerhouse within the world, but certainly within Europe as well. You're going to get some of that capital flight here too. That's good for our markets in some capacity. They have, VW shutting down some of their, essentially their factories, I guess, for developing the kind of vehicles. You did have the EU just kind of come out and say we are going to do that 100% tariff on Chinese EVs. That's supposed to kind of protect the EV creators within Europe, but we'll see if they can, shake that essentially. Additionally, you have a lot of industry workers essentially protesting right now for kind of better pay within Germany. So a lot of weird stuff going on globally speaking. Let's keep moving forward. You have silver up about 1.78%, trading at 34.60. Mike, let me get a GIF in the den if you are listening. And let's see, you have the Russell off about 0.33. Disney trading a little bit higher at 96.39, which is nice. I was taking a look at Palantir. Tesla's off 1.19. I was taking a look at Palantir. I did get out of it yesterday. If you're listening to my show, I think probably this is definitely like a hold position, but my profit was just through there, and I just didn't really want to risk any kind of negative forward guidance for a quarter or two coming into November 4th. I don't see that necessarily happening. I really do think they've been doing a fantastic job. Obviously, they're expanding within the military sector, and then they've been doing a great job getting in on the private sector as well. Let's take a look. Every Tuesday, we go over to our man, Basil Chapman. Now, Basil Chapman is the author of the Opening Call newsletter. It is fantastic. It is thorough. He's been making fantastic calls recently. One of the things I want to tell you, if you're not familiar, is that if you are a subscriber to Opening Call newsletter, you get access to a trove of educational lectures or webinars by Basil Chapman. Most recently, it was in July, and it was sectors and stocks to look at coming forward. It is a fantastic time, and if you are a first-time subscriber, of course, we have you protected. It is a 30-day money-back guarantee in any event that it just doesn't work for you, but we're betting that it will. We're going to go over to our man right now, Basil Chapman. Basil, how are you doing?
I'm good, Jacob. How are you?
I'm doing well. I'm doing well. You there, Basil?
Yes, I just lost your sound, but now I've got it back, and now I've lost it.
Fantastic. I think we should be good to go right now. Of course, we had Spectrum replacing Rhodes earlier today, so the internet is a little bit funky as it stands. But I know we're looking at the Dark News Index. I'm actually not familiar with what this is. I would kind of like to hear your thoughts on it.
Over the many years, I developed this. I titled it initially, the Chapman Wave dark news cloud cover index. But then people got confused with the candle called a dark cloud cover. So I changed it to the Chapman Wave Dark News Index. And basically, what it had done for years, not just years, but decades, is every time we got to a certain point in the Chapman Wave methodology where I looked at it, the chart, and it said to me, I'm getting a little toppy. I would look to see whether or not there was a factor involved, which would be interest rates. And almost always it would be interest rates, and then we would have a little dive down. And there was a technique where I talk about the internal low and the residual low. It's like an earthquake and an aftershock. Sometimes the aftershock is less than the earthquake. Sometimes it's the same. Sometimes it's even greater. So you can see these lows here, IL, that's the internal low. A little high is the residual low. On the upside, just recently, we had internal highs and residual highs back in September. We pulled back to the lows in October, and we got internal low and a residual low. And then I mentioned to subscribers that every Friday, I try to make it Friday if I can, I have an overview for subscribers, a video that I send out, which really covers a chunk of our positions, what we're getting, why we're getting. You spoke about my webinar that I had. In that webinar, I'd spoken about specifically what we were going to try to do in the next few months in terms of positions that we wanted and sectors that we wanted, and we've been quite faithful to that. So in this particular instance, I had shown this recently, and I said, I think we might have made an internal high in the Dow, and that's on the 15th of October at 43,277. Let's see if we get a residual high. And then we got that. And this is the first time, the latter part of this year is the first time that I've been getting these signals based purely on my Chapman Wave notation, not just the interest rates, because rates have not really been a factor because they've actually been rising, but the market in a sense has ignored that. Mm-hmm. So within that context, what we did is we are long the Dow. We actually aggressively long from the August low, but we've taken some profits, and I waited to see how the Dow would pull back. And you see that the Dow did pull back, and it's gone to what was the Chapman Wave inside track, another technique, repellent zone, which became a propellant zone, but now we're back to that. So I want to finish with this chart. Let me get out of that. And I want to go to another chart right here. And this is a chart that I showed recently. I said, this is a black background of exactly the same chart. This is the Dow daily, and the green line is the 9-period moving average going above the 14, which goes green, and when it goes under it, it goes pink. And if you look at this MACD, the moving average convergence divergence, look how many times we went right to that line, and look how it coincided exactly with a turn down in the general market.
Basil, stay right there. We're going to come right back, folks. Just wait a moment. We're going to come right back with Basil Chapman.
Thank you.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, everyone. This is Jacob Shoup. You're watching the Tom O'Brien Show. We are joined right now by Basil Chapman, the author of the Opening Call newsletter. Basil, before we went to the break, you're looking a little bit into the Dow Jones. Let's take a look what we got going on.
So this is the black background, same chart, black background, but I'm using the moving average, the MACD, that's the moving average convergence divergence, yellow and red lines here. And I'm saying that every time it got close to this horizontal resistance line coincided with the Dow pulling back, and that goes together with the chart that I showed you a little earlier. And look at the slow stochastic, exactly the same thing, that thick white line right across there, horizontal line at about 93%. That's where the stochastic has been pulling back. So it says to me that raising some cash here is really not a bad idea. That's number one. And number two is, within the context of the markets, what we're looking at here is something very unusual. We're rotating through different sectors one at a time, and that's very important to identify exactly where you are. So I was talking about this. I showed subscribers the other day that the Bitcoin, let me just get there, Bitcoin, BTC, there we go. This is the, I'm on the wrong chart. Give me 1 second. There we go. Okay, so the Bitcoin had this particular pattern here in the monthly chart. It's like a cup and a handle pattern. Not one of my favorite patterns unless you're able to, if you're going to get a new position, you've got to get it in this handle way before it breaks to the upside. But this pattern is the same candle, the same pattern that we have in the transportation index. Look, there's your cup and there's your handle.
Right.
So I've been talking about this for a little while now, and I said that if you go to, I'll go, because most people who might not get the futures do get the, they could put the Bitcoin Investment Trust on their charts and to look at this GBTC. We once had this in the 12s. We had two positions. I thought one would be a short term and the other would be long term. We ended up holding them both from the 12s all the way to the 50s. Then we got out of it. We never got back again. I missed the very low down here, but we recently, I love the chart, and I said, I believe that we've made a halfway marker in the move down, where there's a pattern that I call the falling X, where you make lower highs and much lower lows. And then there's a chance that you could start to turn the corner where the tide has been going down. I'm just going to show this chart right here. I think this is it. Nope. Let me move that away. Okay, there's the chart. So it's this chart here where the price goes up sharply, then it stalls and comes down, makes lower highs and much lower lows, and then it forms a base. And all of a sudden, what looked like a down chart starts to break above the downtrend line. I call it the falling axe because that's the axe handle. That's the blade, or to be more sophisticated, it's expanding, declining cone. Too many words. But it forms a cup formation or a V-shaped formation. If it takes out the upper declining trend line, it can go 1-to-1 to the upside. Well, lo and behold, we did exactly that. We've taken out the resistance line. This is like a midpoint, and now the tide, especially with the MACD and the weekly chart, starting to rally. I think we got the handle part of the Bitcoin extension in the monthly chart. So to go with that, we went to IBIT, which is iShares Bitcoin just recently, and we're expecting this cup formation to have an equal number of bars on the left to the plumb line that I chose, to that doji candle there, and that either this week or next week we would hit the 42.99 level, and this would be the handle part of that huge cup and handle, and this could be a really nice extension to break to a new high. And if it goes above that A, above 42.99, it starts actually a leg B to the upside, and that would be very positive. So we are long, and we got this break to the upside of IBIT. It's up 4.7% today at 41.54. It's only in leg C in the Chapman wave. We're always looking for Ds. And this conglomeration, this pattern right here, is a fractal of the much bigger monthly cup formation.
Right.
So this is very positive and should be breaking out. So I've been speaking about this for a little while, saying I think Bitcoin is about, I'd spoken about it earlier on, saying that in April that I think that there was a top and that it should make lower highs and much lower lows, and we'll see if it suddenly can turn the tide, go from going to low tide to starting to move to high tide, and I think this is what we're looking at. So I do like this, and it's in this whole thing of the market where it's rotating through the different sectors,
right.
And even within a sector, there'd be stocks like a Microsoft, which we've been long for quite some time, which was doing nothing, and all of a sudden it's gone to higher highs. It hasn't gone to the all-time high, but this is that rotation that we've been looking at. And as you know, I spoke to you about Robinhood.
Yes.
Because we do have a gold stock, but Robinhood players tend to go to the metals and to Bitcoin.
I see.
So I like Robinhood as a company in terms of what I think that their clientele would be going for. So we've been in Robinhood since the 16s, and yeah, Robinhood is at 28.11. Nice. So that's been a nice trade.
Yeah, they even brought political betting to the binary options. That's a new thing they added. So your analysis on that was 100% correct. Yeah.
I wanted to show you. You mentioned Palantir.
Yes.
You know, I talk about this cup formation and Chapman wave. There's a particular technique that I use where the price on the left side can come down, and if you're able to identify the midpoint, the plumb line, I call it, you can have an equal number of bars going back to the upside, or it's the other way around, from the downside to the up and then back down again. Well, look, Palantir had a 45 round number high in January, second month after the IPO, that's Palantir Technologies. I chose the plumb line to be the exact low of 5.27. That was back in, I think it was December of 2022. Well, the exact number of bars goes to either this month or next month to get to 45.00, a round number, all-time high. And what did it do today? It hit 45.07. So it's gone fractionally above that in exactly the same number of months. This is a technique I developed a long time ago. That's almost the same kind of plumb line that I was using for the Bitcoin. So this is very interesting because the technicals in Palantir and the monthly chart are still very strong, as it is in the weekly. The daily says getting a little toppy. But yeah, congratulations to you. That's a beautiful call that you made.
Oh, it's been treating me well. I enjoy Palantir for sure. And honestly, I want to really say on the Hood call that you made, right? Because I'm a younger guy. A lot of us use Robinhood, and it's it was never something that I thought like, okay, this could really pull on. And you were definitely in there around those lower 16s. And it's nuts to see how well this stock has done since then. And it's staying power too, you know?
I'd like to just show you something.
Yeah.
You see the way this green 9-period moving average above the 14 crossed positive right there?
Yes.
On the 11th of September. And look, right up until this moment, it is still green, still way above it. So that's a real nice technical tool that you can use. I'll talk a little bit more about it in my show tomorrow at 10 o'clock, the Tiger Technician's Hour.
Basil, thank you so much. We will see you at 10 a.m. Eastern Time tomorrow.
Thank you very much, Jacob. Have a good evening.
You too. Folks, stay right there. We'll be right back with Tim Orr.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
What is going on, everyone? Welcome back. This is Jacob Shoup here watching the Tom O'Brien Show. We were just joined by Basil Chapman. We have the composite up about 1% right now. Dow Jones Industrial off about 0.17. Dollar up 0.07. Crude oil down 0.31. E-mini up about 0.3. 3.5. We have a bunch of earnings this week, so we'll see how the market reacts to that. Now, every Tuesday and Thursday, we have our man Tim Ord on. Tim Ord is the author of the Ord Oracle. You can go visit him at ord-oracle.com. And additionally, if you go over to TFNN.com, you can go to the services tab, and we have 2 fantastic webinars by Tim Ord. That is the secret science of market tops, and then 6 secret ratios every trader should know. We have gold making all-time highs. Tim Ord, how are you doing?
Good. So, weird market. Next week from today is election. So, actually, I did go long today. Actually, I'll be long on the close officially, according to my market letter.
Sure.
But what's going on every 4 years is kind of what we have right now. So it's an anomaly. This is not like normal times, especially my indicators are actually any indicators in the market. And we got a lot of type of things. You don't get panic in this type of environment. I don't know why, but the trend does not usually, the 10-day trend does not usually get up to 1.2. Matter of fact, it actually stays pretty low. I think we're 0.95. But let's start on the charts and see where we are. This chart.
Yeah, I have chart 1 up now. Yep.
Chart 1. Anyhow, this is the bottom window is a 5-day average of the advanced decline. And it's another way to find panic. You know, all my indicators are associated with basically panic, some sort of a panic. Acceleration of certain indicators produce panic, and there's a lot of different ways to get it. But once you get panic, this is usually a good sign, because the market won't bottom until it is panic. This is another way to find panic. But anyhow, this chart goes back almost 2 years, and again, there's a 5-day average of advanced decline. But when that ratio gets down below 0.65, when we hit on Friday, another 3 days or two trading day, or actually 3 trading days ago, we hit 0.63, and that turned out to be a decent low so far. The market kind of bounced up, but if you look on the chart, which is all those vertical red lines, kind of dotted or spaced lines, there are times when this ratio got down to 0.65 or lower, and most 99, or I don't know what percentage, but 90 or better percentage of the time, the market flips sideways, if not reversed.
Okay.
And what I'm trying to say here, downside is very minimal.
Right.
To get that kind of a sold out deal. So you really have no downside here. Market has bounced up a little bit. Was that a low on Friday? It wasn't the lowest low, because last it'd be Thursday, we had actually a lower close, but we did have a little bit of panic on Friday, enough to push this ratio down to 0.63. So anyhow, that's one of the reasons why I'm thinking, okay, we're probably not going to go down much. You know, we may just flip sideways. So let's go to chart 2, kind of do some analysis here. So the top chart is the NYSE McCollum Summation Index. Back on, what day was that? I don't have it. I think it was September sometime, or 1st of September. It's been about a month. We did hit plus 1,000 without going below minus 700 first. So the market kind of went down, and all of a sudden just had a spurt of strength in September, where this NYSE Summation Index did get above plus 1,000. And I marked the times in the past when this has happened. This chart goes back to 2007, and that green is times when the McCollum Summation Index hit plus 1,000 without going below minus 700 first. Okay. So it's just kind of a sign of strength out of nowhere. So you didn't have a sign of weakness into a sign of strength. You just had a sign of strength.
Right.
And so, and you notice those times, the market really didn't correct. It kind of just stayed steady, if not move higher. And that's kind of what we're having right now. The summation has backed off some here, but the market's pretty much has stayed strong, if not even moved higher, a little bit higher since first part of September. So that's another reason why I think you got to be long this market. And So summation index, when you get plus 1,000, that's really a strong market. So you're really not showing any weakness in the market whatsoever.
I see.
So we got two different types of indicators kind of saying the same thing. So it's chart 3.
Perfect.
All right, chart 3. Now this is the top window is the RSI 14 period for the daily SP. This is on the SPY. It's good done with the SPX, but SPY. And normally when you hit, if you get an RSI 80, in other words, that's a persistent uptrend in the market. So if you look at, this chart goes back to 2015, and actually over the last 12 months we had it happen twice. But normally you'll get lucky if it just happens once a year. So this market's unusually strong. You get short-term corrections, the little squares on the chart, on the SP chart, which is the bottom window. You can put short-term consolidations in. There's one in 2017. There's another one in 2020. That is actually, that little correction period there was the election. And it went kind of sideways for a couple, 3 months. And we had one we had it on July 10th. July 10th of this year, we hit 81.98, 81.98, and the market did go down for a little bit and came right back up. You never get major tops when you get that much momentum on the RSI above 80. You want to stay between 80 to 85. If you get above 90, that tells a different story. I'll talk about it. When that happens, we'll in the future, we'll talk about it then, but not right now. So that was another sign that the market's just, that's why I kind of kept bullish. I kept buying the pullbacks over since September, because I know the market wasn't going to go down much. So I came close. Actually, one I nailed at the bottom, the other one I was a day off.
Right.
But now we've been creeping up, and a lot of times this RSI 80 area is the midpoint of the next move up. If you look at all these times in the past, a lot of times they came at midpoints. So I'm thinking we're just basically halfway done of this rally. So I hear the music.
Yeah, Tim, stay right there, folks. We'll be right back with Tim Ord of the Ord Oracle.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, everyone. You're watching the Tom O'Brien Show. We're joined right now by Tim Ord of the Ord Oracle. Before we went to the break, we were looking at the RSI in relation to the SPY. Tim, what else are we looking at with this chart?
Oh, yeah, this is kind of looking at the bigger picture, and so we got several different examples that this trend has further to go. So let's take a look at the short term.
Sure.
Which is next chart. And the top window is the SPY tilt ratio. And the next window down is just the SPY. This is a daily chart. And in general, the green part there shows times when the SPY tilt ratio is going up, and the pink times are when the ratio is going down. So you can kind of see the correlations there. As this ratio rises, the market rises. When the ratio declines, the SP declines. And I also have an RSI on this thing, and the RSI is up around 60 area, 63, which a lot of times comes at tops. But there's also, you can use this chart as divergence. Notice if you go in that July period, July to August, the market July top went down. If you notice, going into mid-July or the first week of July, the market was still going up. And if you look at the ratio, that ratio was going down. So that was a bearish sign that the market was going to peak, which it did. Now, if you notice over the last 2 weeks, I got a red arrow pointing down on the SPYs connected to the tops there. We've been going down to sideways over the last 2 weeks. And if you look at the SPY tilt ratio, we're actually hitting new highs or sitting at new highs. It's not going down at all. Matter of fact, over the last 3-4 days, this ratio has been going up. And the ratio trumps what the SPY does. So if this ratio is going up, eventually the SPY is going to go right back up.
I see.
So I started looking at this today. So, I just don't see any weakness here. So even though the market's going sideways, the ratios keep hitting new highs. Seasonality turns super bullish next week. It's one of the most bullish periods after an election because that takes the unknown out of the market, and markets usually hate unknowns. And a lot of times the market declines in an election. This year it's not. I mean, I guess over the last 2 weeks you can call it a decline. It's not much of one. It's more or less traded sideways. But I guess the markets already know who's going to be president here because we would have a steeper decline than what we're having right now. So the market has decided who it's going to be, and the RSI or the SPY tilt ratio is probably going to keep going up, and we actually maybe trend sideways for another 2-3 days, but next week's probably going to be a pretty powerful week up. If you look at if you go into mid-June there, you see that sideways pattern?
Yes.
I wish we could draw on it. Well, we went sideways there, and that's really a good sign. If the market is unable to even pull back in an uptrend, it's usually at a minimum halfway point of the next move up. We've pretty much been going sideways here since 2 weeks. So first week or since mid-October, we've been going sideways. So it kind of gives you a projection that we're probably at the halfway point of the next move up. So I think there's still a good chance we could, percentage-wise, I think we still got at least 5%, maybe 10% before the year's out. So we're intermediate term indicators are not showing any signs of weakness. So the market's acceleration to the upside is probably going to be similar to what we had going into where we are right now. So I think we got a good shot, another 10% higher. So we'll have a 30% year this year, probably is what it's starting to look like. So
it's fascinating you say that, because you also are getting, some of the banks are coming out now, some of their big analysts, and saying that they predicting something like a 59 to 60 was actually too low, which is kind of in line with what you're saying here as well. So kind of interesting to note.
Okay, 60 what?
Like at least for the price of the SPY, like the like 600. Yeah.
Okay, yeah, I think we'll beat that. So,
big time.
But anyhow, it looks good. I don't see any, there's always bearish stuff in the market, but I do a lot of momentum type studies, and the bigger trend is still bullish. How long is it going to stay bullish? I don't know, because last year was a double-digit year. This year is going to be a double-digit year. We'll get another one next year. We'll have to wait and see. So, I'm not a predictor. I'm more of a marker. So as the numbers come in, I try my best to do analysis on it. So we got a little bit of time of gold here.
Absolutely.
Let's take a look at that. This is gold. This is kind of a momentum indicator. This is the bottom window. Seems the up-down volume for some reason works a lot better than the advanced decline. Don't know why. Don't care, but it does. And so that's what I follow. And the bottom window is the GDX up-down volume percent with the 50-day average. As long as that thing stays above zero, and we've been staying above zero since basically April, 1st of April, which is all that the blue part there are times when this ratio or this 50-day average of the up-down volume is above zero, and we're staying. I think yesterday we had like a 7+. We're down just a smidge, 6.92, but we're above zero. And if you notice on the top there, it's the GDX. I got a blue trend line, dotted trend line going across the top there, and we broke above some previous highs around that 40 range. So the downside is about 40 is all there is. And I don't know if we'll even test it or not, but internals look fine. Bigger trends up. We're going to go higher. How much higher, don't know. But so far I'm not showing any weakness. So, we've been up. This is what, 6 months? It's about 5 months. April plus 5 that's 9. So about 6 months we've been trending higher, and so far so good.
Big time.
So let's go to the last chart.
All right.
This chart.
Let's get it up.
This chart kind of, what I do with this chart picks I can find short-term highs, this chart, and the bottom window is just the cumulative advanced decline on the daily part. Next window up, second window up from the bottom is the cumulative up-down volume, and the top window is GDX. Let's go to the top window. I have a shaded pink area there. If you notice, back in December of 2023, that GDX made higher highs, and I got a red arrow showing that higher highs. If you notice, the two indicators both made lower highs. So that's what normally shows up at short-term highs. So then you got a decent correction all the way into March. Then the market rallies out of March. It goes into May, which is that shaded blue area. If you notice, GDX went down in that time frame.
Yes.
And both those indicators went sideways. So it wasn't confirming a high at all. Then if you go into the green area, which is next, that'd be July, the market went down, just pulled back and made lower lows, but the indicator of the up-down volume basically didn't make a lower low. It just made a side low. So anyhow, well, currently we're making higher highs, higher lows on the market, and that's the definition of an uptrend.
Definitely is. Tim, thank you so much for joining us today. We're going to see you Thursday, all right?
All right, sounds good. Thank you.
Fantastic. Folks, stay right there. We'll be right back for a short segment.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, everyone. This is Jacob Shoup. You're watching The Tom O'Brien Show. We were just joined by both today, Basil, Chapman, and Tim Ord. If you missed either of those interviews or just kind of want to go back over them to hear what we were talking about, you can do so. You can go over to Tiger Financial News Network right on YouTube. If you do decide to do that, please consider giving those videos a like and our channel a subscribe. It helps us all out immensely. I was taking a look at CRISPR, and it's doing that thing we were talking about. Now, I think on the long term, it goes through this cycle a little bit too slowly. But, we were looking at CRISPR around this level, the 4540, and it's, essentially moving up to the 50 level, tested that, rejected it. And I would assume, we're going to get maybe a week or two of it traversing back to 45. Kind of too slow, I think, to play the range like that. But yeah, I thought this was kind of interesting just to look at. Taking a look at Cisco 2, this is going to be interesting into 2025. They are really rolling out their kind of AI starting next year, which is awesome. They're going to be using the GPUs from NVIDIA, which is fantastic. The company shipped 1 billion of orders to 5 of the 6 top hyperscalers. It expects 1 billion in its current fiscal year. So, you get Cisco basically getting adopted into the fold of these hyperscalers, you're going to have a good time. It has not done that well this year, however, but we'll see if it can just get a little bit more attention going forward when people, when people start realizing like, okay, these guys are going to be established in these massive kind of data centers. You have Ford off majorly. Of course, we have Google off at the end. I wonder if Ford. It's so interesting too with GM actually doing okay with their EV segment, you know, all things considered, and Ford really just getting hammered on it. And so there's definitely some kind of competitive advantage going on there with GM that Ford doesn't have. I was looking at this to see, you know, maybe there is a dip potential here, but no, that seems pretty accurately priced right there. Folks, thank you so much for joining me today. We're going to see you tomorrow. Tommy O'Brien comes on at 9 a.m., and we're going to have a great show then. Take care, folks.
Building wealth